Continuing with my analysis, beginning of the week, I spoke about the first, the 1st of October to the 1st of November. So this is the whole month of October. This is the highest high and the lowest low of October. So November, when we punched, I spoke about when we punched here on November. Um, okay. Um, we assuming that from the October low, we will attempt to trade to October high. That is the bias. As long as we have not reached the October high, from this taking out October low as liquidity, the assumption is that the target will be the October high. It happens that the October high became the previous year high. The previous year high because what happened November, second week of November, we push higher to this premium PDRA. And when we reach this premium PDRA, we we go back to the discount, which is this one, the breaker. When we reach the breaker, second week of November, we attempt but we don't reach the high. So this becomes another liquidity. When we start January, we go high, we take out this liquidity, and then what do? We come back, we attempt to trade to this breaker, we fail to trade to the breaker, and we start pushing higher. And this was the point of interest for us to go higher. The daily inversion fair value gap, low and high. This Monday when we opened by trading below this Friday and Thursday. So the low of this of the low Friday and the low of Friday, the low of Friday and the low of Thursday, we traded below that as liquidity sweep, and we used this PD array. So the low of the daily inversion fair value gap low to go high. And also this, so at this point the market has been made jagged, was made jagged here. So this is too clean and here is clean. It's just like a small tap. And if we go to like a professional market like NQ, NQ, okay, my NQ, it's on delayed data, 10 minutes delayed data. Here's NQ, okay, you see, I'm I'm not subscribed, but it's 10 minutes delayed data. But I'm using this is high time frame, same thing with the same thing, but here it touches the breaker twice. There with Nasdaq, it's a CDF. It never. This is more accurate. So here it even failed to reach the premium array, and but it left liquidity. So this makes it a higher draw on liquidity before we even reached the new year high, the previous year high. This has to be the target for anyone attempting to trade to go higher. Okay. Um. Okay. Let's we spend some time, then we push high. Let me go back to Nasdaq. Nas. Or let me check ES quick. ES. Yes. Okay. ES. So ES, what has it done from the daily chart? It has been using this fair value gap. It has used this fair value gap to push higher. While the NQ was using a breaker with ES, this was the PDRA what was present to push price higher. Okay, again, same thing, and now we are here. And this is the highest high for ES. ES has already taken the high. Now, everything happened from Monday until Tuesday. Right now we are on Wednesday. We're on Wednesday and the time is 5. The time is 5. So we still have news, high impact news happening later today. So this news then, how can this news, because everything is about time. So time is the first element. So The economic calendar is basically the first element as a guide, as a guideline. We know we can use the news to manipulate and then later use the right direction. So right now we are all bullish, we bullish, and we're going to assume that we're going to be bullish unless they give us reasons why we should change direction. But going to Nasdaq 100, this is the CDF, and at least this one. I'm South African. I'm South African, so beginning of the year. So I'm looking at this January. Okay, I can even start from December. December was consolidation, January consolidation, February it takes out the previous year high, previous year high. So from here, this is January, this is whole January, 2024, January to December, January to December 2024, 2024. This is the whole year's data. What did the market do? January it opens. This is the lowest low of 2024, and this is the highest high of 2024. What does the market do? It opens, consolidates, create relative equal highs. It takes out the previous year high and start pushing lower and making the Judah swing of the year. This Judah swing lasts until April. Then second week of April or the last week of April, it shows the market pushing higher. So this was the Judah swing. It started February. So I'm assuming that the same thing can happen. Okay. We do not try to pick tops in bullish markets. I know that. Okay, but I'm going in this year with the same perspective as last year, unless it shows us something otherwise. January consolidation, February it takes out the previous year high and starts dropping, creating a Judah swing of the year, and then the whole year the market is pushing higher. It's pushing higher. Same thing. It's a new year now. What has happened? December, same thing as last year. Consolidation. January, same thing as last year. Consolidation, but it's start the first move of the year. Here it's starting right now. It's happening as I assumed that this would push price higher. When you take out the yearly high, okay, when I take out the yearly high, I have in mind that okay, the Judah swing of the year may start as soon as possible as February. So I will not try to pick the top. I'll continue to be bullish until the market shows me that okay, February will push price lower because we can the news can be used as a smoke screen to just push the market higher, and then later the market starts the Judah swing of the year like last year. So for now, we're still bullish until we reach this target. And when we reach this target, we're still bullish until the market shows us that, okay, it is bearish because we already anticipating that we're going to have the Judah swing of the year starting in February. So we already are preparing for market maker sell models because this was a nice run, like a nice bullish run. Well, I anticipated this nice bullish run. So when I'm looking at this run from the 1 hour, from 1 hour, this is the previous week, Monday until Monday. Okay, but the market opened on Sunday. So what when the market opened on Sunday, what did we have? We had this previous day low and a fair value gap. So we tapped into this fair value gap, and the wicks do the damage. The bodies tell the story. The body stayed up here. And here it even fails to use this fair value gap. So it will be a good assumption that this will continue higher. And yes, it did continue high. And while it continued higher, yes, I assumed that it will use this fair value gap to tap back to it and continue higher. But it used which is another PDRA, previous week high. It used the previous week high to continue this run. While the market was here, this was the drawn liquidity. This was the drawn liquidity. This was the drawn liquidity. Okay, and then it reached there. Okay, so now we are we are next to the target. We will reach the target. This is beautiful. This is beautiful. I just want to say thank you to ICT for giving this information for free because then this is yeah, he knows. You don't have words to you can never have words once you understand this information. It's really amazing. It's really amazing. So this is where I had like a nice trading idea that this thing is gonna push higher. I think let me go to this my channel. Um, okay, okay. I have, let me see. My channel. I think already here. Opened here at 6. Okay, let's just check these moves and time. With with let's start with the importance of time. 6 time first, 6 o'clock. Price at 6. It hits this. Come back later. Let's see again. Here it's the AM session, 8:30. 8:30. That's where the low forms. Already 9:30 shoots higher. Again, this time. What at this time it uses the previous week high. The algorithm uses the previous week high at precisely 4 Eastern Standard Time, New York. Again, in rare attempts, it even fails at 6. Hmm. Okay, it's fine. Pushes high again. Let's go. Let's go. Does the At this time, this is 9:30. There's a 1 hour favorite gap. This is a 1 hour favorite. You know what? 1 hour favorite gap. Here, 1 hour favorite gap. This is after taking this high. This is the favorite gap after taking this high. There's this favorite gap too. Okay, and there's this another upper favorite gap. So the timing is very important. 9:30 again. See where do these lows fall? Like 9:30. Okay, come again. What is this time? It's 1 p.m. session. Okay, already okay. I had this. It's fine. Again at 4, at 4, precisely at 4 again. It's a low and the 1 hour favorite gap. Again, 6 again. This is where we are right now. But this whole 6 makes the low and just push highs. Okay, here now. Where does this 50% coming from? It's from the daily chart. Daily chart is the consequent encroachment of this daily high. I'm so sorry, Anele. Okay, I think that will be fine for today for now.